All right, upon request, I was asked to look at Bitcoin and MicroStrategy. So I'm going to do that. And if anyone out there wants me to look at a market, I'll give you my opinion. It is my opinion only, not financial advice, but an analysis on how I see the market. So to start it off, I have the indices, ES, NQ, and NASDAQ, and Bitcoin. And I'm using the futures chart for those, the continual contract. And MicroStrategy is part of the NASDAQ index, so good to know right there. Is it following along the broader market or not? Well, it's not, but we'll look into that too. So, but first it's going to be, since MicroStrategy is basically very much correlated with Bitcoin, we'll start with the Bitcoin analysis, then jump to MicroStrategies. So one of these things aren't like the other. We can see that ES has pushed up, made all-time highs. NQ just stopped just stopped ahead of it, or just pierced it. We'll see. On settlement, on the adjusted for the contract, the current month contract, it did tag that right there. This is also adjusted for the current month. You can see that we're well above it on ES. Let me make this, let me use a different line here. I don't want to. So the black line is fine. Same here. And then there's the high for Bitcoin. So obviously Bitcoin is nowhere near its high, whereas ES and the NASDAQ are very close to their highs. So what does that mean? Well, it doesn't mean a whole lot in terms of what the market is likely to do, but it means that Bitcoin is weaker, right? Because it's weaker. And this high is sitting right here. Bitcoin is barely above it, where this weekly high, Bitcoin had to close above it, fell back below. And that weekly high is the 16th of March, which is here, which ES is, or I'm sorry, NQ is way above it, and then also ES is way above it. So that's just showing that there's a correlation. It's a risk market, and the correlation is that it's not falling in line with the broader risk markets. It's significantly weaker. So let's look at the spot price. Now, I did my yearly analysis on this, and I mentioned for the year that the market is really likely going to come down and work this candle's range, this wick of this candle. This is a yearly chart, and you notice it stayed in the upper half. I can grade this real quick. You can see that it went about 60 on the, well, it would actually be about 37.5% into that range. So I could flip this so it's like that, 37.5%. So for me, for the down move that I was forecasting, it's already done its job. It already achieved the goal within the first quarter. Now we're in a new quarter, and it's time to reevaluate and reanalyze, because what I put out in January or at the end of December has already happened. Now what? Now going to the monthly or the quarterly chart. See, we opened up a new quarter. This candle closed well below the last quarter and this quarter, and inside that yearly range. So it's finding a little bit of struggle breaking down in the yearly range, which kind of makes sense if we're looking at a quarterly chart right here. That yearly wick range, the wick high, the premium wick high of that range, which is also this wick right here, was we can see that the market consolidated for several weeks, several months, really, in that range. And now it's back to it. So it's in this side of original consolidation before it broke out. You see that right there on the monthly chart. Okay, so what do we know? Okay, so we know that this is now I'm going to actually go back just a second real quick. The fact that the market closed below this high on a quarterly basis, it's signaling that the market is not strong. And then we have this high. This is an imbalance. This is a buy-side imbalance, sell-side inefficiency. It was used to propel price higher once it swept that low, and now it disrespected it and is heading lower. So that tells me not that strong, or, which is also not that strong, I would say it's weak, or, so lower prices or consolidation. Monthly chart, we have right here an inside month and an inside, which was inside of this month. So we're still inside of February. So we're going to do Feb's high right here. And put that in blue. Feb 26 high. Now I'm going to remove this because we already know we're in the upper half and the market is having a difficulty. It didn't cut through this consolidation like butter, right? So you can say that we had a break and retested that consolidation, but really we already had that, which would have been down here, even though it didn't quite tag it. So that's showing a strong market, the fact that it didn't tag it and ripped up. So we got the February high there, and I'm just going to clone that and do that February low. Low right there. So that's the range that the market's in, and then we have the March high and the March low right there. So put that right there. You hear my daughter, she's playing, but doing this on the fly, don't really care about the production. So higher time frame, we got it mapped out. Like I said, we've already hit the yearly objective, which was working the wick, which was essentially this consolidation, which has been tagged. First objective was the old all-time high, which is here, which has been tagged. So essentially the yearly trade can be done, right? If you already took the yearly trade, profits should have been taken. And I need to just look at this really quick. I gotta go back to all these because these are visual. Okay, cool. Weekly. Now we're in the weekly range. Okay. So, strong market. Is this a strong market? Well, no, it's really consolidating. But what's it really doing? It's staying inside this range from February. So we're looking at the market was unable to break down here. So it tried, failed, took out the high, back in the range. Grinding high. So the market is essentially range bound and grinding higher in a high resistance liquidity, meaning it's not in a hurry to get anywhere. A lot of give and take, a lot of back and forth. Signaling to me that the market is likely wants to go lower. And I'm looking to the low here. And the low that's way down here. Now, I'm not saying it's going there, right? But these are the lows that I'm looking at. Why? Well, these lows are very clean. Very clean. The market is not seeing a big impulsive move up. When it breaks a high, for instance, it broke this high right here, fell right back into the range. Another weekly high, setting that weekly high right there. Once it broke that high, back into the range. That high is higher than this high, so we'll go with not that high, but this high, which is the March high. Hit it back into the range. A lot of give and take. That means it's grinding up higher and likely wants to work this area right here. So this area in price, which is the massive dump, which is the sell side imbalance, buy side inefficiency. And if I drop a grade on that, inside this area is the first premium, meaning where it starts getting expensive. So I would be looking for the market to continue that move higher based on the data that I'm seeing right now. So on the weekly chart, but not swiftly. It's not telling me that it's going to be swift. It's telling me that it's going to take a while. So let's get down to the daily chart. See, we took that daily high. If it was going to be quick and easy, see these high right here are very, 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 very clean. The fact that it closed if I take that entire candle's range and extend that out, the fact that we closed above the 50% of that candle's range, which is the mean threshold, I would be looking at this candle to be a propulsion block where the market trades up to it and propels it lower. It's not doing that, right? Well, it did it here, but it failed to do anything down in here. So it's showing me that it's not ready to go lower yet. It still wants to go higher. How high? Don't know yet. It could stop right here. But one of the biggest things that's staring out and glaring you in the face, that I love the idea that it will come up to 79,339 and take out February's high. I love that idea. But the fact is, it needs to get above the March's high. So when it got above the March's high, it broke down. Okay. So it's not showing us that it wants to get there fast. It's not showing that it wants to do it with speed and distance. It's showing us that it's continuing to grind higher. So we have this area in price right here. This is another buy side imbalance, sell side inefficiency. And I'm going to make that a fair value gap. The market trades up to it, holds it, trades back down to it again, and then now it looks like it's pushing up. So it's still holding. Losing this, if it loses this area in price, I would expect it to act as pick up resistance to start heading lower. Where? Here first, right? The fact is the market's range bound. So you can't be looking at the market any more than that, because it could come down from this low to this high. It could come down all the way down into here, leave that low, and then start grinding up higher again. Now, if it does it with magnitude and speed, it'll be obvious that it's done in this area in price, and it is likely going to go low. But right now, it's not obvious. This is just right now, as of right now, it's simply a pullback from the range low set here to the range high here. That's all that it's doing. Now, I will drop down lower. One thing is, though, if the market cannot get above March's high, so if the market, for instance, wicks up and then falls back down into the range, or it can't do anything above here and then breaks down in the range, that's showing me that the market is using the range from this high to that high to pair orders to send price lower. Okay? That's telling me if the market cannot get any rally above the March's high inside, get rid of that. This box, I'll change the color as not to confuse it as an imbalance. We'll make it red like this, like kind of color. That's telling me that the market's likely going to go lower if it cannot push up and work these highs. Now, I'm eyeing these highs. This is where I think the market's going to. I'm going to drop down to a 4-hour chart. Now, the interesting area in price is these lows right here. Why these lows? Very clean lows. These lows are very clean. So I'm looking to see if the market has a willingness to work to these lows. And as of right now, that's not necessarily an impossibility, right? So it looks like it's going to be working towards higher to try to work above March's high. So I would be watching the swing high here from the weekend. I'm going to label that minor buy side. Why is it minor? Because it's inside this low to that high. So if I'm measuring this low to that high, that is a premium internal liquidity pool. The market may utilize this to send price lower. So what you would actually see, if this is going to happen, the market will trade up and get back down to that range. And it depends on how it moves. And you would see heaviness to grind to there. Now, if it gets up in here, and you see speed under this low, this is going to be on a 4-hour chart. I'm not really going to go under a 4-hour chart. If you see it close above here, not showing a willingness to actually break down, it can close candles under it, but we're talking breakdown, heaviness, bigger candles on the way down than on the way up. And then you get a close above this high right here. And I'll bold that in black. If the market starts closing candles above there and expanding, then we know we're going up here. So it's in a spot because it is a high resistance liquidity run. It is a choppy market. There's a lot of give and take that this could have been just a deep pullback into this range to send this thing higher until it wants to hit here. That's what my base case is, that it's going to 79,338 or 339 and then working into 80K, right? We'll see how it does. And then from there, we'll see if it starts rejecting. But right now, that is my ultimate kind of goal where I think it's going to. And I would be wrong if, like I said, it sweeps this high, this bold level right here. We could put a price on that. Let's put a price on that. Let's do this. Right here. $77,045 and 52 cents. If the market shows strength above there, big energetic move, small pullbacks, we know we're going here. If it doesn't, if it wicks, and this is on a 4-hour closing basis, if it can't even close above it on a 4-hour, it just kind of wicks. It starts chopping around and looking heavy, or it goes up to this minor buy side liquidity pool and breaks down. We know we're going lower, which would be this low, and then ultimately those lows here. And how it reacts once it gets there, if it's heavy and wants to see speed and distance, then it would be going to the March lows. These lows, and February's lows, leaving all this. But with those clean highs right there, I do like the idea of it coming back up into there. And it could even work even higher into closing up to near 90K. So that's what I'm looking at right now. So where does MicroStrategy fall into this? So MicroStrategy kind of saying the same thing, very similar. Looking at this consolidation right here, MicroStrategy, I have that consolidation, that whole thing measured. The fact that MicroStrategy broke below the midpoint of that does show me that it's not strong. Okay, this area right here does show me that it's not strong. However, it didn't break down from it, which is a positive for the bullish case of it. So this market is clearly in a discount. If you actually take the high to the low where this move started, it's a clear discount market. So using this high to this low right here, just like that, or using the low that was set here, to here, it is an area of premium. I'm sorry, discount, where it would be a good time to buy and hold. But what I don't like, for me, what I don't like is it kind of left these lows. I would have loved to see it liquidate it and then come back up into the range and then get above the 50% of that consolidation. So we didn't get the liquidation that I would have wanted to see. So that keeps me a little bit suspect. But as long as ES is going higher, I'm sorry, not ES, as long as Bitcoin's going higher, we could, looking at this range right here, I'm going to measure this range right out on a monthly chart, from high to low. What kind of movement will we see inside of here? So I'm going to get rid of the consolidation. Don't really need it right now. Came back to it. The midpoint of it was not supporting lower prices, so it kind of found a near-term bottom. So where would it likely be heading? Most likely to the high here and the high here. So we could see a move up back to $200 near that. Nothing in this chart is saying it won't do that. So we can see 190 working inside of this range right here. Where that would kind of fail is if it falls down to under this high. So if the market starts breaking down under that high, so essentially getting down to under 150 again, kind of knowing that this kind of thing's done. It's done enough. So that's where it is. It's hard to be uberly bearish on both assets because of how low in the range it is, right? It's very discounted. Both of them are. But because they're not keeping track with the overall risk markets, it's hard to be overly bullish. So what do we have? We have a range-bound market. Real simple. And the range on on MicroStrategies is going to be the high here and the low here. Where are we within that range? We're essentially in the upper 75% of the range. So I'm going to get rid of all this stuff because I'm going to leave the red, pink area because the market is most likely going to continue to draw here. But if it fails to get any momentum really inside of it to work these highs or even the midpoint, and it starts rolling over here, it's done its job. It's done enough it's done enough on the bullish side for it to just kind of start turning over. So we would be seeing that now the market's at the 75% of this range. A true bullish market would be in a hurry to take out this high. True bullish market could have a slight pullback like it's doing now, and then once it breaches the high, we see big movement higher. And that's what you would want to see on a bullish market. So, and having no interest to kind of fill in this gap. That would tell us that it's going higher. So right now, for me, if you were going to be a buyer, it's kind of made the move already. Buying down in here was the best case. Same thing for Bitcoin. If you were going to be a buyer in it, buying, down in here was the best case. So let's go right back to Mr. So that's where I'm at. These are the levels that I'm watching. This is what I want to see. So they're both kind of the same thing. Let me go to the monthly real quick. That is the February high. So the February high is definitely in the cards. If we look at the March high right here. So let me just identify this as the March high. Trading above that March high. Like, this is not breaking down. Okay, this is kind of a nice grind lower. We're seeing lower lows, but we're not seeing big movement under the lows. So it takes out the low, comes back up, leaves this low back up in that range. So it does look like there could be a little bit of accumulation taking place intraday right now to send this thing higher even for the week. We'll see. And that's it. So long story short, Bitcoin is at a crossroads. Is it going to be bullish? Is it going to be bearish? March 26 high, that's going to be the catalyst for it. Now, if you're going to be using MicroStrategies as a leading indicator, it's already above its March's high. So, and it looks like it wants to go higher. And it's part of the NASDAQ. So as long as the NASDAQ still wants to push higher, then we're probably going to see that same, as long as the indexes are pushing higher, we're going to see that same thing kind of play out and work higher. And there is a geopolitical event with the Iranian war, so we don't know how that is going to come into play on risk markets. So there's still a lot of risk out there. So it's definitely not something that you could say, okay, everything's hunky-dory right now. Geopolitically, it's not. So it's a volatile situation, so it'd be definitely going to manage your risk on that. And if there's any other assets to look at, hit me up. Take it easy.